Welcome to another exciting trading session. Today, I'm going to walk you through a powerful scalping strategy using the 8 EMA and 14 EMA. This strategy is designed to help you catch quick moves in the market and maximize your intraday profits with precision. If you're new to this channel, I highly recommend checking out my previous video where I explained this strategy in detail, how it works, the logic behind it, and the best ways to implement it effectively in your trading. That will give you a solid foundation before diving into today's session. All right, let's take a closer look at the chart. As you can see, the Parabolic SAR has formed below the price, which is a strong indication that the market is likely to move in an upward direction. This is a classic signal that buyers are stepping in and the momentum is shifting in favor of the bulls. Now, something even more interesting is happening. I'm noticing that a white Marubozu candle is trying to form right here. This is a powerful bullish reversal candlestick pattern that typically appears after a downtrend or a price retest, signaling that the market is gearing up for an upward move. The white Marubozu is characterized by a long, solid bullish body with no lower shadow or wick, which means that from the moment the candle opened, buyers were in full control, pushing the price higher without allowing any significant pullbacks. This kind of price action reflects strong buying pressure and could be a sign that a new uptrend is about to begin. If this formation completes, it could provide a great confirmation for a potential long trade. All right, now I'm getting ready to enter a long trade based on the signals we've analyzed so far. The market structure looks strong, and with all the confirmations lining up, it's a good time to take action. However, I always aim for the best possible entry point to maximize my risk-to-reward ratio. That's why I'll try to take my position as close to the red EMA as possible. The red EMA acts as a dynamic support level, and entering near it gives me an added layer of confidence. If the price pulls back slightly and touches or comes close to the EMA before bouncing back up, that would be an ideal entry point, allowing me to minimize risk while maximizing potential upside. In scalping, setting a clear target profit and stop loss is absolutely crucial because trades happen quickly and we need a well-defined plan to lock in profits while managing risk effectively. Without a proper target and stop loss, it's easy to get caught up in emotions, which can lead to impulsive decisions and unnecessary losses. So the first step is to set our profit target. For this trade, I'm keeping it simple and logical. My target is the previous high, because previous highs often act as natural resistance levels where prices struggled before. If the market is strong enough to break past it, that's great. But for now, I want to secure my profits at this logical level instead of being greedy and holding on for too long. By setting a clear target, I ensure that I'm trading with a plan rather than relying on hope or emotions. Now that we have our profit target in place, the next step is to set an appropriate stop loss to manage risk, which I'll explain next. When it comes to setting my stop loss, my go-to method is following the Parabolic SAR dots, as they act as a great dynamic guide for trailing stops and identifying potential reversals. In this case, I'll place my stop loss slightly above the blue Parabolic SAR dots. The reason behind this is that these dots represent potential support and resistance zones. If the price moves beyond them, it could indicate a shift in momentum, signaling that my trade setup might no longer be valid. Now, looking at the chart, I've chosen this specific level for my stop loss because the price was previously rejected here and then bounced back, making it a key resistance level. Placing my stop just beyond this zone allows me to stay in the trade while avoiding unnecessary stop outs from minor price fluctuations. Honestly, scalping has never really been my preferred style of trading. It just doesn't suit my approach. I like to focus on trend-based trading, where I can identify a strong trend, ride it all the way through, and book my profits at the very end of the move. This method works well for me because instead of taking multiple small trades throughout the day, I aim to catch bigger moves in just one or two well-planned trades. Not only does this help me maximize my profits, but it also keeps my stress levels in check. Scalping requires constant attention and rapid decision-making, which can be mentally exhausting. On the other hand, trend trading allows me to stay patient, trust the process, and let the market do the heavy lifting. Of course, every trader has their own style, and what works for me might not work for everyone. But if you prefer a more relaxed and rewarding approach to trading, trend following might be something worth considering. Drop a comment below and share your favorite trading style. Are you a scalper who loves quick trades, a trend trader who rides the big moves, or maybe a swing trader who patiently waits for setups? Also, tell me why you prefer that style. Everyone has a unique approach to the markets, and it's always interesting to learn different perspectives. Now, coming back to our trade, we're almost there. The price is moving closer to our target profit, and it looks like it's just a matter of moments before it hits the mark. And there it is. The trade has automatically closed, locking in a solid profit of $473. That's the beauty of having a well-planned setup with a clear entry, stop loss, and target. Once everything is in place, you let the trade do the work for you. All right, let's move on to our next trade setup. This time, I'm looking for a buy trade as the market conditions are showing signs of a potential upward move. If you take a closer look at the chart, you'll notice that the price is approaching the EMA levels, and based on my analysis, I'm expecting it to bounce off these EMAs and push higher. This kind of setup often provides a strong entry opportunity because moving averages, especially the 8 EMA and 14 EMA, act as dynamic support and resistance levels. Another key confirmation I'm seeing is that the green 8 EMA is positioned above the red 14 EMA, which is a classic signal of bullish momentum. When the shorter EMA 8 stays above the longer EMA 14, it suggests that buyers are in control and the price is likely to continue moving upward. So with these confirmations in place, I'm ready to take this buy trade and see how it plays out. Just like in the previous trade, I'm going to set my target profit at the previous market high. This level makes sense because historical highs often act as resistance, and if the price reaches that point again, there's a good chance we'll see some reaction. Instead of getting greedy and holding on for too long, I'd rather secure my profits at a logical and tested level. Now, if everything goes according to plan and the price follows my expected move, this trade will bring in a profit of $225. It's all about sticking to the strategy, setting clear profit targets, and managing risk properly. Now it's time to set the stop loss, which is just as important as setting our profit target. If you look at the chart, you'll notice that the Parabolic SAR dot is very close to the current price level. This is crucial because the SAR dots help identify trend direction. As long as the price stays above the dots in an uptrend, the momentum remains bullish. However, if the price crosses below the SAR dot, it signals a potential momentum shift, meaning the trend could reverse against our position. That's why I'm placing my stop loss right at the SAR dot level. This way, if the price moves in our favor, we stay in the trade. But if the price crosses below the dot, it confirms a momentum shift, and we exit the trade to minimize losses. Now let's talk about risk. If the market moves against our trade, I will take a loss of $126. This is part of trading, and what matters most is sticking to the plan and ensuring that our losses are small and controlled while our winners are larger. With both the profit target and stop loss in place, our trade is now fully structured. All right, the price is just about to hit our target, and we're moments away from closing this trade in profit. And there it is. The trade has successfully reached the target, a great example of how a well-planned scalping strategy can deliver consistent results in a short amount of time. Now, if you've been paying attention, you'll notice that I executed this trade on gold using the 1-minute time frame. Gold is a great instrument for scalping because of its liquidity and quick price movements, which makes it easier to catch small yet profitable trades. But here's an interesting thought. What if I applied this same scalping strategy to BTC? Since Bitcoin is known for its higher volatility compared to gold, the same effort and strategy could potentially lead to even bigger profits. BTC tends to have larger price swings, meaning that even with the same number of trades and risk management, the potential gains could be higher. This is why choosing the right asset for scalping can make a huge difference. If you're wondering about the indicators I used in this trading session, let me break it down for you. I applied 8 EMA green, 14 EMA red, Parabolic SAR blue dots. These indicators work really well together for scalping, especially when combined with price action. They help in making quick trading decisions based on momentum shifts and trend confirmation. I strongly recommend watching my previous videos where I explain more strategies in detail. If you're serious about trading, it's important to adopt a strategy that fits your style. Experiment with different techniques, fine-tune your approach, and over time, develop your own unique trading strategy. That's exactly what smart traders do. And with that, we wrap up today's session. If you found this video helpful, don't forget to like to show your support, share it with fellow traders, comment below, and let me know what strategy you prefer. Thanks for watching, and I'll see you in the next video. Happy trading!